Hey, this is Matt from InvestiQuant. Today is Tuesday, December 15th, 2020. And before I get started here, real quick, just a reminder that tomorrow we will be hosting our auto trading webinar. And this will be a webinar where you can come learn about how you can participate in our auto trading program, which will trade our automated strategies in your account without you ever having to even open your platform throughout the trading day. Everything is done in an automated fashion. The broker oversees the entire process. All you have to do is open an account and let us and the broker take care of the rest. So we'll be doing that tomorrow after the close at 4:30 p.m. Eastern Time. There's a link below this video, InvestiQuant.com/webinar, where you can register for it and you can learn more about that tomorrow after the close, 4:30 p.m. Eastern Time. All right, so let's get into this morning's study. So like I said yesterday, a lot of seasonality type events taking place here as we approach the end of December. One of them that is taking place tomorrow is the FOMC announcement. So I figured today we would look at what has happened historically in a similar market environment on the day before the FOMC announcement. So let me go ahead and set this up. We'll look at all four instruments. The setup's going to be based upon entering the market long at the open of regular trading hours, which is 9:30 a.m. Eastern Time, and exiting at the close, which is 4:15 p.m. Eastern Time. Now, for this seasonality-like study, I want to put us in a similar market environment. I'm going to define that as below a 10-day simple moving average and above a 200-day simple moving average. Then I'm going to go to the market events section, and I'm going to say that it is the day before the FOMC announcement. Normally, I add an opening filter to it. This event does not happen all that often, and then when you put it in a similar market environment, you do start getting rid of a lot of samples. So I want to keep as many samples as possible, so I'm going to skip over the opening filters. I can tell you I've looked at it in both, and the main takeaway is the same for up gaps versus down gaps. So let me just go ahead and hit view results here, and we'll take a look. All right, here we go. So these are the results of going long at the open, 9:30 a.m. Eastern Time, exiting at the close, 4:15 p.m. Eastern Time. When tomorrow is the FOMC announcement, and you're in a similar market environment, which I have defined as below a 10-day and above a 200-day simple moving average. Now, historically, we've got 33 samples in the S&P dating back to 2003. We've got 39 in the NASDAQ, 35 in the Dow, 40 in the Russell, so pretty similar sample sizes for this market environment on the day before FOMC announcement. If we look at the win rates, all of them just slightly favored. We've got S&P 55%, the Dow same there, 55%, whereas the NASDAQ and the Russell are both a little bit stronger. NASDAQ coming in at 62% and the Russell 63%. And these percentages are telling you the historical win rate for closing above the opening price. So essentially that is a green candlestick for the session. And if we look at the average win to average loss, you'll see the average win larger than the average loss here in the S&P. That is also true here in the NASDAQ. Same size here in the Dow, and then the Russell, the average win is larger than the average loss. So we're seeing larger average wins than the average losses, and the win rates mildly favor. And like I said earlier, I did look at this with up gaps and down gaps. The down gaps are stronger than the up gaps. We are looking like we're going to gap up this morning. But when I say stronger, I mean the down gaps have a higher win rate slightly, whereas the up gap win rate is a little bit lower. That is on a lighter sample size. You're basically cutting the sample sizes in half. But the takeaway of, the bigger moves being on the upside compared to the downside hold true for the up gaps or down gaps. So hopefully you found that helpful. Good luck the rest of the day. Be sure to sign up for that webinar here at the link below, InvestiQuant.com/webinar, and we'll see you after the close tomorrow.